Welcome to my corner of the internet. I'm the House Hacker. Today I want to talk to you about bulls, bears, and pigs. Now this is the second video that I've made about investing. In the description below, I'm going to link to the first video. Strongly recommend watching that first. First, we're going to start talking about bulls, bears, and pigs and what they have to do with investing. Then we're going to talk about predicting the market, or rather trying and failing. And finally, we're going to touch up on risk mitigation techniques rather. And if you stick around to the end, I'll give you the breakdown of my investment allocation, which obviously will change in the future, but what it is today. So let's dive right into this. There's a saying in investing that bulls make money, bears make money, and pigs get slaughtered. Let's unpack what this quote is all about. Bulls are your optimistic types. They believe greatness lies ahead across the horizon. These individuals, they have wild rides up, wild rides down, but at the end of the day, they make money. They're the optimists. On the other hand, we have our bears. These guys are less optimistic. These are our pessimists. They see crashes and corrections around every corner. And what they do is they mitigate their risks. They don't have wild rides up or wild rides down. They have these pretty stable ups and downs, and they consistently make strong returns. Bears make money. But then we have our greedy and impatient little pigs. They think that they can time the market. They think that they can buy low and sell high, but what ends up happening is as the market goes up, they buy in, and as the market comes down, they sell. Their constantly changing strategy causes them to buy high and sell low. And everyone, including myself, has a little bit of that pig inside, making you think, maybe I'm different. Maybe I somehow am smarter than the millions that have come before me and failed. And you try and you fail. That's the reality of it. Pigs will get slaughtered because they try to time the market and they fail. You can't time the market. Predicting how an individual stock is going to perform is a much harder task than predicting how an entire sector is going to perform. And sectors, if you don't know, are different categories of investments. So you would have industrial sectors or technology sectors, energy, all of the different categories that you can invest in, that a company could fall in. And just for fun, here's a chart of how the sectors have performed historically, ranking, putting the top performing sector at the very top and the lowest performing sector at the very bottom. And go ahead and pause the video and predict where the top 3 sectors are going to be for 2019. And then we'll reveal the answer in a second. Here we go. How did you perform? Were you able to predict the top 3 sectors? If you weren't, do you really want to bet all of your money on that? See, the key here is consistency. You don't want to play the game of predicting, you just want to play the game of buying and holding. That's all it takes. As long as you're buying and you're holding, that'll get you the results that you're looking for. Now, to further analyze this chart, let's try and break the data down in a spreadsheet. And so I already did that. On the first tab, I wanted to see how often a sector performed well rather than how well a sector performed. And so as you can see, compared to the S&P 500, the sectors performed about the same if you were to invest evenly in all of the other sectors. So that's telling you that the S&P 500 is quite balanced. And you notice that some sectors seem to win a little bit more than others, but when you see what the discrepancy is, it's actually quite small. And then if we switch to the second tab, this is where we get to see how well the different sectors performed. And you can immediately begin to pick up on maybe a couple different patterns now. You might notice that technology has been doing really, really well compared to the other sectors. Real estate doing not so well. But as soon as you take away the crash of 2008 from the data, you can see that real estate actually did quite well and comparable to many other sectors. Now, something to keep in mind, just because the market behaved a certain way in the past doesn't mean it will continue to behave that exact same way in the future. And in fact, if you look at the data, you can see that it's morphed quite a bit. You know, there was a time when energy was doing really well, and that time really is over, at least it seems that way, because energy has been doing pretty poorly as a sector for a while now. And if you're still not convinced of how difficult it is to predict, here's another chart that I found, which I found kind of funny, because it talks about, it identifies every single time people said, oh, this is the top, or oh, this is the end of the market, and this is the bottom, and all things like that. It's just fun watching that, because people are constantly saying, okay, this is as good as it's gonna get, and it just keeps getting better, and the values continue to increase. And it's just such an interesting graphic to take a look at. And it really puts things in perspective that predicting is really hard. And here's the thing, you know, you got a lot of guys out there that are selling stock tips, and they're trying to sell you guys on the secrets to success. You know, just one guy the other day I heard about, he turned $25,000 into $1 million. That right there is a 4,000% increase. Now, what does 4,000% mean? That means it's 40 times more than what he originally had. So let's think of it this way. Let's say that this person can make that increase in 3 years, because they were relatively young. So, you know, 3 years is about what I would expect based off of their age. So you're telling me that you grew, if I were to take, based off of your tips, $1,000, within the first 3 years, it would become 40,000. And within 6 years, it becomes over just under 2 million. Think about that. If you have the secret to make money like that, would you really sell it for $200, $300? Absolutely not. I wouldn't sell it for $1 million. If I had a way to turn my money 40 times more, to just increase it, I wouldn't sell that for $1 million, because within 9 years, I'd be sitting on $40+ million. There is no reason at all for me to sell for $1 million. That is $100 million thing that you would sell right there. I would sell it for $100 million. Would not sell it for a penny less. So when you see these guys trying to sell you stock tips, no, that is totally insane. Because they can make so much more money if their tips are often successful. They would make more money just throwing all of their money at it instead of trying to get you to enrich their pockets. All right, next I'd like to dive into what I call the 20/20 rule. Now, this isn't a rule I read about online. This is actually a rule that I created myself. So if it exists somewhere else, I apologize for stealing the idea. I didn't actually steal it. I conjured it in my own mind. And it's actually a solution that I implemented because, as I mentioned earlier, we all have a little bit of that pig inside. And so the 20/20 rule works like this. If you feel that urge inside to day trade, to buy and sell, to see if you can invest and make some money based off of short-term investments, this is a solution for you. So what you want to do is take 20% of your portfolio and put it in a day trading account. The other 80% needs to stay in long-term investments, but you take 20% up to $20,000. Do not go over $20,000. There's a valuable lesson to be learned here. Just don't learn that lesson with a lot of money. Try and minimize how much money you lose here. Day trade with it. Transform it. Start it at that amount. If you manage to turn it into $50,000, that's fine. You don't have to pull the money out if you don't want to. Just keep trading it. But compare it. After doing this for, let's say, 3 years, compare. Take a look at the money that was in this account and the money in the other account and how much each has grown. Obviously, there's going to be more money in the other account because it has 80% of your money or more if you have more than $100,000. Now, what I noticed, and what I think you're going to notice as well, is there's going to be periods of time when you have just cash sitting in the account waiting for an opportunity to buy in on something. And that's going to cost you money because every single day, inflation is going to eat away at your money, and every single day, the market is going to adjust and is more often than not going to adjust upwards rather than downwards. You're also going to notice that some of your trades are going to be real killers. They're going to be phenomenal trades. And you're also going to notice that some of them are going to be terrible duds. As you play this game, buying and selling stocks, just compare the numbers at the end, and I think you're going to find that you're going to be losing money. Not because you might have made bad decisions. I mean, when I did it, I actually came out in the positive, like I was making money off of it. But when I looked at my long-term investments, I was just making so much more money there that it seemed irresponsible because I was leaving money on the table that could be mine. So when you look at this, it gives you an opportunity to reflect and really materialize in your own mind, in your own eyes, see that you're just not smarter than the market. And sometimes if you're as hard-headed as me, it's going to take that for you to learn that that's the case. Another thing you can do to minimize your risks that a lot of professional investors do is you can get really familiar with something called a limit order. Now, limit orders, you can use it for buying or selling, and you could say, I want to buy X amount of this stock at this price, or I want to sell X amount of this stock at this price. And so it's not going to buy or sell until that price is hit. And so one of the things some people can do is they could do something like saying, I want to sell, the stock that I hold if it drops below 10% of its current value. So if there's a 10% drop, sell. This does mitigate your risk. For example, if you had a 30% drop in your future, it's now been managed and limited to only 10%. But here's the thing, what happens if something catastrophic happened in the market that day for the stock that you had and it dropped 15%, but people got really emotional that causing it to drop 15%, and within the next day, it sprung right back up to its original price. What just happened? You just lost 10% like that, right off the top. I don't recommend this way of doing things. I know those professional investors say that it works for them, but the truth is, those investors fail to outperform the market. I mean, if we look at their ability to outperform, these very popular index funds like the S&P, you're going to find that they actually don't outperform it. And in fact, after 15 years, 90% are outperformed by the index funds. So you would be unwise to adopt too many of these techniques, these active trading techniques. Another technique that these professional investors use to make more money is options trading. And options trading has potential to make you a lot of money or to totally crush you and bankrupt you. So options trading is not necessarily trading of stocks or ETFs or index funds. You're trading contracts. You're trading agreements. And the agreement would go something like this. So you would have call options or put options. And so in a call option, it would say, I'm in it on a future date between me and you. On a future date, I'm going to buy this stock from you at this price. And so if in, let's say, 3 months, the stock goes up, to $300 and our agreement was at $100, I just made $200 because you were forced to sell to me a $300 stock at the price of $100 a pop. And here's the other thing about options trading. The minimum amount that you can buy in for a lot of these is 100 stocks. So you want to be cautious because mistakes here can be very big. And the thing is about options trading, is you're trading at chunks of 100 stocks at a time. So think of it like this. Tesla in March 2020, their price was around $80. And right now, their price is around $800. If you were to do a put option, you would be on, let's say you were going to do a put option for $100 on Tesla. You would be out so much money, like 8 times whatever it is. I mean, that's a lot of money to be out, and it can astronomically grow. Like, for example, I'm going to give you a hypothetical company. We'll say that you have a put option for $50 per stock, and you have 100 stocks like this, right? Because these contracts are done in 100 stock segments. And in 3 months, the company that you did, this is a medical company, they invent the cure for cancer. Stock price jumps all the way up to $1,000 a stock. So you just basically lost $100,000 and fees. I think I forgot to mention that. With these options, you have to pay a fee to purchase the right to use this contract. So you need to be extra cautious because, you know, when you're purchasing the option, right? So back to the example, $50 a share. Well, you're probably not going to pay $50 a share. You're probably going to be paying like $51 a share because you got the $1 fee. So you don't actually pay the full $51. You just pay the $1 a share. So you can go into this option. You could, buy the option for $100, and then you can be on the hook for $100,000. You can see how this, you just went into this with such a low amount of money, and all of a sudden now you're dealing with this astronomical mess. So you've got to be really, really careful with these option trades. And I don't do them. I strongly don't recommend them for you or for honestly anybody. There's just so much risk, and the risk gets compounded on top of itself. It's just not worth it, to be honest. I would only buy and hold unless you're an insider, because it seems like insiders are the only ones who seem to be outperforming the market substantially above everybody else. I mean, obviously insider trading is illegal, but somehow the insiders seem to outperform the market consistently. So be safe in how you invest. Focus on the long-term goals and don't be a pig and be impulsive and rash with your investments. Be a bull or be a bear, just don't be a pig. And that is the key to success with investing. So now that we reached the end of the video, let's talk about my allocation. And I wrote it right down here. Here's my notes. So I've got 5% in crypto. I've got about 1% in bonds. I've got 26% in stocks and 9% in international stocks. So the 26 is in US stocks, 9% in international stocks. 52% of my portfolio is real estate. I know I'm not balanced. I'm sorry. It's just, that's where I made a lot of my money, is real estate. And 7% is in cash. Now, I will say that the 7% in cash is also including my safety net, but that's a fraction of that. I am hedging against the market. You see, balanced portfolio, and sometimes having a little bit of cash is a good way to hedge against market turbulence. And I'm a little nervous, so I'm hedging against the risk of a crash or a correction. Again, this is not investment advice. This is just me being transparent about what I do. I have no idea if this is going to make me a lot of money in the future. I mean, historically, this seems to be a successful balance. It could fail in the future. In the future, energy and medical could be making money, and tech could be really like losing money. So you never really know how any of the sectors are going to balance out, and you don't really know. Maybe international stocks are going to do really well, and U.S. stocks are going to do really poorly, and you don't know. So take what I just shared with a grain of salt, but I just shared it for transparency purposes. Thank you guys for watching. Comment below and let me know what you guys think about My balanced portfolio, do you guys think it's imbalanced? How do you think I should improve it? Like and subscribe and share the video. Help more people check out this channel and help it grow. Thanks for watching, and I'll see you guys on the next one.